Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. This is Cashflow Ninja. My name is MC Laubscher, and I've got an awesome guest for you in today's show, Taylor Welch. He's the founder of Traffic and Funnels, Wealth Cap Holdings, and the SalesMentor. Taylor, welcome to the show.
Amazing. Thank you for having me. Glad to be here.
Yeah, super excited for our conversation today and to connect for our listeners. Taylor is a uber entrepreneur. He's doing a lot of impressive things in business and investments. And when I came across a lot of the things that he was doing, I said, this is someone that I need to have on this show. For folks not familiar with you and what you do, can you please share a little bit about your background and journey with them?
Yeah. So I was not the typical kid who wanted to be an entrepreneur. I envy those people so much because they're like, that I was selling lemonade when I was 12. And I'm like, man, if I would have had that head start, oh my God, imagine. But I had no idea what entrepreneurship was. I actually worked at a church. My wife was an entrepreneur, and I got into marketing first and foremost because she wanted more clients. And I was like, I can teach myself anything. Let me pick up a book. I got into marketing, discovered that I had a knack for it. I actually, if you look back, I have a knack for learning. I didn't necessarily have a knack for marketing, but I had a knack for the acquisition of skills in learning. So I learned marketing, connected with my business partner, Chris Evans. Things blew up, things exploded. Oftentimes I feel like if you look at your life, oftentimes you've got these ingredients, but they're not put together in the proper recipe. And then once you can figure out the recipe and get around the right environment, the right people, it can be a spark that just sets the forest on fire. And that was me, man. Like, I was raised in, the idea of leadership. My dad was a VP at a big company. And when I got into marketing, it was like all of these ingredients, my whole life kind of were mixed together in the right order. And man, we just started going and pushing and running. And then I fell in love with the game, forgot about money. Who cares about money? And I just loved building business and kind of turned into the definition of like a serial entrepreneur. It's like, man, I'll build something. I'm tired of it. Let me go build something else. Hire the team, build something else, and here we are,
Yeah. What I love about what you did too is how the businesses kind of flow into one another and they serve different purposes, to your point, in your overall wealth strategy, because I see that, a lot of your businesses generate cash for you, but then, you are doing something else with the money to invest passively, generating income independent of your businesses. Can you talk about the certainty that provides and gives an entrepreneur? Because it changes the game completely, right?
100%. It gives the income a meaning. I always tell people in presentations and talks, I think there are three main assets or three main types of wealth that you can build. Income is the first one, because if you don't have income, it takes away freedom. And when you're first starting out, you think that income is everything because you don't have any. And you don't have any choices. You don't have any options. And so it's the one thing that matters. But then you get to a place of surplus and you're like, man, income is just the first step. You don't have any meaning past a certain level of income. Once your bills are paid, economic people say that it's the constantly devaluing utility of money. Once you have a little bit and you have a lot, it becomes less and less valuable. And so we got a big tax bill. I can tell you the whole story, man. We had a big tax bill in 2017, and we were like, this sucks. We're giving away so much money. And we went into the next phase of wealth, which is your assets. What are you actually, I feel like income is the height of the tree, and your assets are really the root system down in the grounds that keep everything from blowing over with a little bit of wind. And we just were like, we're going to put all of our money into assets, because I don't want to give all of my money away in taxes. And now I love paying taxes. Everybody's got to pay taxes. We live in a great country, and to each his own, whatever. But investing that income into assets gives you this ability to really get grounded, and you're not worried about what the market's going to do. You're not worried about, the economic crash of 2020 because of the pandemic. You're not worried about there. It takes away the stress because you have a constantly growing base of assets, and then you're able to compound that. Income doesn't compound by itself, if you think about that, but assets compound by itself with no outside interference. And so, yeah, TF is an income source, SalesMentor is an income source, but then WealthCap is designed to take that money and convert that currency from a devaluing currency, which is dollars, cash, because of inflation, whatever. The Fed is printing $4 trillion. Your money's about to get less valuable, whether you like it or not. It's just going down because of inflation. So you take that currency and you swap it over into an asset, and those assets, they're designed to keep up with inflation, get more valuable, and then you wake up in 10 years. I tell clients all the time, if you fell asleep for 10 years, would you wake up richer or poorer? And the reality is, if you only focus on income, you're waking up poor, man. Like, unfortunately, you have nothing in 10 years. But if you are investing in assets, man, I wake up in 10 years, I have done nothing, but I'm a wealthier man in 10 years from doing nothing. It's a no-brainer if you think about it the right way,
Yeah. And especially if you build the systems. And one of the things that you touched on is so true, because sometimes entrepreneurs have a mindset that they can solve all problems with more revenue and making more money. But you just alluded to, well, as the revenue goes up, if you don't have a plan, if that's your only plan, then guess what else comes up with that? Your tax bill, right? And all of the other things. So you have to figure out the places and the roles that everything's going to play, because there's many different things that assets and good, solid, hard assets is doing for you in every type of economy, up, down, and sideways.
100%. We just did a presentation with a bunch of investors for WealthCap, and I'm going to take it and give it to some of our clients on TF because I think it's valuable. If you look at your life like a linear left to right, everyone's got the grind years, and these are the years that you just don't like what you're doing. You're in college, or you're in school, or you're a beginner entrepreneur, and you might love it, but you hate your life. Let's be honest. Like, you're working from 4:30 in the morning to 9 o'clock at night. You're not making any money. You are grinding, right? You've been there. I've been there. Everyone has to go there at some point. You earn your stripes.
Yep.
And then you have this period in the middle where it's the return, the reward years. And people get lulled to sleep in their return years, their reward years, because they don't realize that there's another season after that. At a certain point, you're going to get tired. You're going to have grandkids, or your business is going to go away, or a competitor is going to buy you, or whatever. And how a person handles their reward years determines that third category, which is either declining greatness. We all have a friend who, like, they only talk about when they were in high school playing football. It's like, dude, that was the peak of your life, man. Or they only talk about how they used to make all this money and they used to have this business. This is when you get to that declining period of your life where you have to work past your prime because you never set anything up. Or you can have what we call the crowned jewel, where Chris is at, where I'm at, even though I'm only 31 years old. I'm not old. I'm not as old as Chris. So, I don't have kids, and like, I have one daughter, but he's got a 16-year-old. She's about to start driving. She's about to leave. Chris doesn't have to work anymore. He's able to spend time with the people that matter to him because he made wise decisions in his reward years. I think so many people miss this because they're just living high off the hog, but there's a way to set your life up so that you never have to work again if you don't want to. And that's freedom, man. That's ultimate freedom.
Yeah. Which ties into some of the other types category that you focus on too, and a freedom. One of your most valuable resources and assets, time and identity, that you've spoken about.
Yeah, so if you picture income is the first class of wealth, and then assets is the second class of wealth, and then the third class of wealth is really the most important, which is time. If you think about it, everyone talks about it, but very few people really get the point driven home. There's only one asset that we cannot recover. You can be in shape now, right? And then in 6 months you're out of shape, but you can get back in shape.
Yeah.
You can have money now, lose it, and then get more money, but you can't miss your son's first baseball game and ever go back and get that. It's gone. Time is this asset that's never going to replenish. And so what we really try to take people is from the bottom to the top. You know, we have a guy named Alaric, and I always brag on him because he joined traffic and funnels when he was in college. And it was a really big decision. He was scared to death, but ultimately he did it. He was making $4 or $5 grand a month, and he got to the place in TF where he was making several $100,000 a month. And I think he's 25 or 26. It's ridiculous. And now he's buying properties. And we're taking somebody like that from a place where they don't have income, they don't have assets, they don't have time, to a place where they have income. Now they're building assets, to hopefully a place in the future where he's now going to get his time back as well, where he's going to replace the income he makes from his business passively. And ultimately, what that does for a person is it frees them up to really spend the time that they have on this planet doing things that they care about, doing things that are in alignment with who they want to be. And identity kind of rests underneath everything else. You know, everything flows out of your identity.
Yeah.
If, you know, we have people on my job as a CEO is transitioned from coaching clients. Now I'm really coaching team mostly, and those team are coaching clients. The one thing that we have to really tackle more than anything else is somebody's identity. You know, out of their identity flows insecurity or confidence. Out of their identity flows fear or strength. You know, that identity you have and how you feel about yourself sets a cap on your level of influence in the world. And it's very difficult to outgrow a bad identity. I'm not saying it's impossible, but it's very difficult. We can go as deep into that as you want, but it's a big swimming pool to dive into.
Yeah, absolutely. I love that framework of the three types of assets: the income, assets, and then, or three types of wealth, rather: income, assets, time, and identity. Let's dive into all three of them in a little bit more detail. If we think about income, we think about businesses, we think about where we are at today. You know, I call it sort of the reset, which occurred and happened, right? And a lot of people are going to recreate, reinvent, and recalibrate their businesses and what they're doing. And of course, in times like these, I think it was Simon Sinek that had a video out on his team where he said, this is not unprecedented times. Yeah, this just happened a lot faster than the other times. You kind of saw the other things kind of coming. So for folks that are starting right now and building, try to generate income and building income, there's certain parts of the business too, which you've spoken about, of levels of income. What are some of the things that you can share for some of our listeners and viewers to be looking at doing in this new world, in this new economy, to generate more income and build businesses?
Yeah, so there are the basics, and then there's the nuances. And most of the things we teach, we separate those two out. The basics are going to be, you know, you got to go to the gym, you got to eat the right food. That's it. But the nuances are like, man, let's program in a deload week, because not every week can be a push week, and let's actually track your macros. You know, and you eat more on training days than you do on non-training days. You see the difference between like just the basics of doing the right thing versus the nuances of doing the right things the right way. Those are very different categories. The basics right now are like, man, people, you are going to earn income in direct proportion to two things. Number one, the amount of pain you solve for other people. And number two, the level which your identity will allow.
MC Lampshire, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com.
So you can be you can have the best business where you're just solving real problems for people, and people love your service and they love what you're doing. But your identity, your thermostat is set at $30,000 a month, and anything over $30,000 a month starts making you feel fearful and nervous and afraid. And I've seen people actually unwind profitable businesses because they are so addicted. They are so mentally addicted to feeling like they're in that grind. They want to stay in that grind, that they will go in and break things so that they can then come in and fix them. Sounds weird. Sounds crazy. But you've probably seen this 1,000 times yourself.
Yep.
And so from a basic standpoint, it's like, you know, what is it right now that people need? What is it that they are afraid of? What is it that people are really, when they are going to bed at night, what are the things that they are actually thinking about when they don't want to be thinking about them? What are the things that people are afraid of, but they don't want other people to know that they're afraid of them? Finding these secrets in human psychology will give you a lot of runway to be able to create new products, new businesses. And right now, in a season of economic, retraction, what you want to focus on is you want to focus on the vitals. In a good market, you can build a great business, a thriving business, focusing on the extremities. Where it's like, hey, let me make your life more convenient. Cool, people will pay for that. Not now. They won't necessarily right now. You want to focus on, before I could make money with a Band-Aid, but now this person's neck is bleeding. I'm just going to go to the vitals. And that's a big difference. Don't be creating a business around an app that helps people with traffic. Like, that's not going to probably be your best bet right now, because people are more worried about food than they are traffic. So how do you go for the vitals rather than the extremities? And then also with velocity is an interesting thing. The reason we are in a retraction is actually not because money's not there. There's more money than there's ever been in the history of the world. There's trillions of dollars that we didn't have 2 months ago. It's actually velocity. The speed of money is slowing down. So, the person who pays their rent, and then that rent is distributed out to the employees, and that person goes to Starbucks, gives the money to Starbucks, and the barista gets paid to Starbucks, and then they save their money, they invest in a coaching program, but the person at the apartment, it's a cycle. The money has slowed down. So what you have to do as an entrepreneur is you have to compensate that with your offers by speeding up. So in fast velocity, you don't have to make as many offers, but with slower velocity, you need to be making a lot more offers, touching a lot more people, putting a lot more effort into the process, and that will counterbalance. Make sense?
Yeah. How about price points too? Because that's obviously going to tie into this new economy too.
Depends on what you're selling, but remember, price points is really not as much of the issue, because and here, let me prove my point. If the market loses money, if the money is going down, then price point is affected. But right now, what we're seeing is there's more money in the market. Everything is lifted. The volume of money is lifted. So price point's not the issue. Velocity is the issue, which means, and what affects velocity? Believability, excitement, human emotion. Those are the things that affect the speed of money. So what it means is that if you keep your price point, don't change your price point right now, talk to more people, get better at communicating that there's a need behind what you're doing, because the same people who were buying 6 months ago, they're still going to buy today. They're just going to take a little bit longer. So you need to have more irons in the fire. That's my point of view, and it's actually working out pretty well for our clients.
Yeah, and I think also there's a lot of people ready to kickstart their lives again, right? They're ready to rumble and get going. So there is going to be that emotional, as you mentioned, driver of people getting in there, trying to build their businesses, employees going in and working like they've never worked before to get this started, because there is this instilled fear, like, oh my goodness, like there could be really, really bad times ahead as this thing gets going up. And this is a lot of opportunity for everyone, because people are going to really want to exchange, which is all, the velocity is what you were talking about, right?
100%. Yep. But that's an opportunity for entrepreneurs to lean into that, lean into that excitement. The fear is actually probably more damaging than what you're actually afraid of.
Yeah.
And, being able to communicate that to people is important, but being able to communicate that to yourself so that you don't become a person of retreat. What wealthy people advance in times like these, they don't retreat in times like these. And if you actually study the markets, it's a little trippy how historically everybody who is wealthy today picked up most of their wealth in bad times.
Yep. And let's just go back to 2008, 2009, that last crisis. Think of all the sharing economy basically came from that, and the many different businesses that was built just around the sharing economy.
People think that this one is going to be worse than 2008, but I disagree. In 2008, we had a trickle down. It was a trickle down crisis where the people at the top were making bad decisions, and they were, they were bundling the loans. And you've probably gone all into that. The decisions at the top affected the people at the bottom.
Yeah.
But now we have a trickle up crisis where the people at the bottom are really destabilizing all the way up through the chain. Somebody gets laid off, they can't pay the rent. That's a trickle up. It's trickling up. And what happens with the trickle down is it tends to take a long time to recover because you've got the organizations at the top and they've made all of the decisions and they've lost all of the money, and that's forced down to the person at the bottom. But with trickle up, like for instance, we have 30 million people in the United States who have lost their jobs, but it's a binary switch. That's what people aren't realizing. Every restaurant opens back up, all these things start opening back up. What are those businesses going to do? They're going to go rehire because the businesses have liquidity.
Yep.
And so I think it's very different. I think it's going to be more of a V, and it's going to be potentially more damaging for a second, but it'll pop back up pretty quick because you cannot discount the human emotion, excitement piece of this recession. And call me crazy, but I think that this is probably going to be a quite a bit different type of recession than 2008, 2009.
Yeah. No, there's most certainly going to be a lot of opportunity. I can just see people already ready to rumble. And to your point, a lot of the businesses and there's projects that I'm involved with where we basically had to shut down, period, that when it opens up, there's going to be people needed in those projects. So we're gonna have to hire and rehire a lot of the folks that had to be temporarily laid off during the last time. Let's then touch on, so that's some of the income pieces of this, and there is a lot of opportunity when it comes to income, and there's some valuable insights that you just shared. Let's touch on the assets, the part of wealth. Again, you mentioned, investing passively, generating passive income. What are some of the things that you're looking at within your business? So maybe if you can also share what type of real estate are you guys in, what type of markets are you looking at, and what you're seeing for real estate in the coming year in 2020.
Yeah, so we stick to single family only right now. And the decision was made in early 2019 because my background before I became entrepreneurial was in real estate. Chris has a background in mortgages and loans and the financing side. And all my experience was in single family. And obviously multifamily was going through a boom. It was the sexy. And when you become a seasoned entrepreneur, you don't like sexy. You kind of steer away from that because I'm like, man, if it's sexy, everybody's going to be coming and trying to compete with me at the same time. And I tell people all the time, they think I'm literally out of my mind. If I could have a portfolio of businesses, they would be boring, like lawn care, pesticide companies, like things that nobody wants to do. Nobody grows up being like, I want to have a pesticide company. But that means that the barrier of entry is likely higher and the competition is going to be lower. And if you study market cycles, most of the times businesses get destabilized because of competition and price deregulation, which comes from competition. So we stayed in single family. Right now we're in lower density areas. Again, if you would go back, if you look at our journey, you would think that I predicted the future. Me and Chris predicted the future. We didn't. We just honored fundamentals, principles. We didn't want to be in highly dense areas where everybody was competing for the same pieces of land. We wanted to be more in rural areas that were supported by a bigger city, but a suburb of the bigger city. And so we have a couple suburbs in Kansas City. We are in the suburbs of Birmingham, Alabama, which is like the holy grail of investing. We're in the suburbs of Charlotte, North Carolina. We're starting to get into Knoxville and Branson for vacation rentals. So man, these are just boring properties that you can pick up really undervalued, and then we have rehab teams in the markets that fix them and puts tenants in them, puts renters in them. And so I tell people all the time, I have two goals with the assets, and these are prioritized goals in proper order. The priority number one is capital storage, not income. Because if you follow this thing the right way, like you already have income sources. You don't need income from assets. You don't emphasis on need.
Yeah.
Right? I'll take it, but I don't need it. So the number one goal is capital storage, which means you can't lose it. That's the only thing. Like, I want to put money into the market and I do not want to lose it. If it's $50 a month in income, I don't care right now. I don't need the money. I just don't want to lose the money. And then the second is all of the benefits of real estate investing, which is, equity pay up, debt pay down. You're going to have your cash on cash returns. You're going to have your appreciation. So 1 is storage, 2 is growth, and in that order. So I will take a lower income property if it's just more bulletproof and safer, and I know I'm not going to lose it, because you got all this income. That's the last thing you want to do is lose that income. And what we're seeing in the real estate market right now is multifamily is obviously getting tanked, getting hit.
Yep.
Commercial is set for a massive tank, especially commercial in dense areas or destination areas. So, somebody sent me a PPM for a fund that is buying up commercial in San Diego. And I'm like, hell no, not right now. Of all, you're in California. Okay. I don't like, sorry, but like, I'm not going to invest in California real estate because, they're talking about actually canceling rent in California. You want to be mindful of the places that you're putting these assets on the ground. The coasts, the West Coast, the East Coast, high density destination type areas. You don't really, it's not that you don't want to invest there. You just want to be okay losing everything if you do, And so staying in the rural areas, we're seeing people pay rent. I think we collected 95% of rent last month. This month seems to be good as well. Blue collar areas like Birmingham, Home Depot stayed open, Lowe's stayed open. A lot of these blue collar job distributors, they didn't close. They're seen as essential businesses. So we followed the zip codes and we followed the hospitals. Those are two pieces of data there to make sure that your house is going to be rented. So I'm kind of rambling here, but hopefully
no, this is good stuff.
Okay.
Yeah, so there's a lot of good stuff that you just shared here. One of the things was very good lesson here. If you're listening to this, if you're just getting started, Taylor said he was familiar and he knew single family. So that's what he knew. He stuck with what he knew. He didn't dive into something else because it was sexy or because everybody was running in there. So very valuable lesson for anyone in any type of investment is only invest in what you know in, and what you've become an expert in, and what you've worked in. So that's huge. And the single family. The other thing that I also want to touch on here is, yes, the rural kind of away from the bigger cities and stuff, it is almost like you saw the future, because I can see that a lot of people are going to start looking differently at where they live and saying, man, like we just went through this. Am I going to rent an apartment downtown in a major city? Or am I going to get a little bit further away in rural towns with where the prices are a lot less than the big city, so your quality of life and your cost of living is lower too. That's a big one.
Yeah.
And then the commercial side, I'm just thinking about that. Like most companies have figured out how to work remote. We've been doing it for a long time, so we know, but most people that still had the stigma of like, oh, I can't work from home. How does that work? Can't really do the stop and chat at the water cooler or the coffee, but no, they're probably more productive. And I think a lot of companies, so yeah, what's going to happen to commercial real estate? Where big offices are. And then some companies, maybe they might even look at overheads differently now. They might go and say, man, I just signed this lease of, yeah, and I'm under pressure. There's stress on the business. I got to save this thing. I'm getting out of this lease and people are just working virtually.
Yeah. I think the one caveat to that is probably things that are, like storage is technically commercial.
Yeah.
But it doesn't service businesses. It services more individuals. And I think that's probably like threading the needle a little bit. If people are in storage, or if you have a storage opportunity, you could probably get away with that. And it's different than a business complex. Yeah.
Yeah. Oh, yeah. I can see storage do well in recessions, and because people move somewhere. There's always during boom times and during recessions. There's a lot of things in there.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements.
So the investment side, this is huge, and I love what you're saying too. One of the things, another golden lesson out of what you just said too, is the difference between very, very successful and ultra wealthy individuals and families and the average person is that the ultra wealthy families and individuals they're much more, how can I say, cognizant of not losing money, right? Where if you look at what the average person does, yeah, sure, I'll put it in the stock market where I have zero control over anything, and you don't really know how to protect yourself because most people don't know how to protect themselves with options and stop losses and so forth. Where the really ultra wealthy individuals and families, they really like. You name the quote. You name the famous investor. There's a quote that they've thrown out about not losing money, and during times like this, it most certainly is all about not losing money and preserving that wealth. Because as you mentioned, once you start losing money too, now you're in a hole. Now you're trying to get back at it. So yeah, those are really, really good stuff. Want to talk a little bit about time and identity. You've talked about time. Freedom of time is huge. You've touched on identity. I wanted to see if you could share a little bit more about that, because I just think that is going to be so important for everyone right now, because a lot of people have been shaken up. A lot of business owners, there's a lot of folks in my network that have been very creative and they're getting through this and doing really cool stuff. But then there's other folks that, they are in different situations, so they basically have to redo it, and your identity is going to play a massive, massive role in that.
Yeah, so in 2015, I started getting into the philosophy of Stoicism and Marcus Aurelius, and just the idea that, I don't know if you've studied Stoicism or if you're familiar with it, but what I started learning is that the volatility of a person's identity, if you're not aware of it and you're not conscious of it, it'll ruin you. Like, so many people, they feel like their value comes from what they have, or they feel like their value comes from how much money they make, or their value comes from how many people they help. Even that, people don't realize, like, that's an unhealthy identity. If your value comes from how many people you feel like you help, that's still deferring your value onto something external. It's still unhealthy. And so you got a lot of entrepreneurs who will grow through these three levels of identity. The first level is, I am important because of what I have. And then the next level is I am important because of what I do.
Yep.
And they stay stuck there because it feels okay. Like, I'm feeding 1 million people. I'm helping this. Well, that's still the level 2. There's a third level. I am important because of who I am. If I never do another thing, do I still have value inherently? And I really do see this. Like, I see more people get out of the game or kicked out of the game because of an improper link up of their values and what makes them valuable, what makes them important, than I do people who get kicked out of the. For me, like, I went through the same phases. In 2015, I started. First month as an entrepreneur was March of 2015. Okay. By January of 2016, I was over 100K a month. That's fast. That's really fast.
Yep.
By May of 2016, I was over $500,000 a month. That's fast. That's fast. We started giving money to people. We started giving money to orphanages. And I went through this level of like, man, I had all this ego and I had all this stuff to unpack. And I was like, I started feeling superior and I started feeling better. And because the more money I made, the more valuable I became. to myself. And all of these things that were written, you know, way back in the day, I found out are really, really healthy. And you get into like old Christian texts and manuscripts, and all of it's the same. If you look at real ground philosophy, most of it has to do with the idea of tempering that chronic hunger for more, and tempering that, that desire to have more. And so for me, like the way we teach clients is just you reverse that scale. Be, do, have. And most people do it the opposite, have, do, be. But if you flip it up on its head, the first thing you have to focus on is, who am I? What am I? Who am I becoming? And if I know who I'm becoming, then I know that the things that I do are going to be flowing out of the right place. And those things that I do are then going to equate to true things that I have and true important moments that I have. And so many people get this wrong because, an employee doesn't do a good job. Okay. And they react from a place that they are currently at, and they end up doing it the wrong way. Rather than being like, no, I'm going to go ahead and I'm going to become this person who's already at my goals, and I'm going to respond with grace and humility. And we got these entrepreneurs who are creating self-fulfilling prophecies, and they just keep handling the same situation wrong over and over, not because they don't know what to do, but because they don't know who to be. They're not being the right person. It sounds a little woo-woo, but it's absolutely true, as validated by close to 80,000 clients at this point. So.
No, I like that, and I've spoken about that too. And actually, that's one of the things that I ask myself daily now. Actually, who do I need to be to do what I want to do in this new economy? Because I'm going to have to change and become someone through this process too, to get through this on the other side. So we are very much aligned with that, my friend. One habit I've observed from wealthy and successful people is that they're always studying new things and learning new skill sets. What are you currently studying, and what are you currently learning?
This is something I just talked about yesterday. It's interesting because everybody wants to know what books I'm reading all the time, like every single day. And I was telling somebody yesterday, studying has become I've evolved from it being transactional, where it's like I'm studying just to get something out of this, to more of a hobby that I'm enjoying. It's something that I'm not doing necessarily to get anything out of it. I just enjoy learning. But I try to take a subject and I'll study it for 3 to 4 or 6 months at a time. I don't think that you can really master something in one book. You're going to have to go a little bit deeper. And so I've switched. You're going to hate this answer, man. I'm just apologizing in advance. But the last 8 months really have been capital allocation, investing, wealth building, all of those things attached to really building wealth gap. Man, when everything locked down 2 months ago, I just started studying politics. I was like, I got to figure this out, because if the business owners of the world don't understand what's going on, pretty soon we won't have businesses to run. And yep. I really got into it, and I have turned that vault of, I've always been this, like I said earlier, like my superpower is probably the study, the acquisition of new skills. And I turned that from capital allocation, business, et cetera. A year ago it was leadership. The year before that it was energy, to politics and history. And what's really going on right now, man? Like, what in the world is going on? And in 2 months, I've just like consumed all of this information. And it might not be the most helpful answer for growing a business, but I do tell people often, like, history is a weapon to be wielded. And the past predicts the future, and the future proves the past. And so it's not even politics that you need to learn, it's history. Like Simon said, this is nothing's unprecedented. It might be unprecedented for this generation.
Yep.
But nothing's truly unprecedented, because somebody at some point has gone through the same exact thing. And so the ability to learn from our past, learn from the people who came before us. Right now, I'm fascinated with it. It's pretty much everything I'm reading right now is about like freaking Abraham Lincoln, or the Federal Reserve, the creature from Jekyll Island, how money, this is the 4th Federal Reserve we've had, the 4th, not the 1st. It's the 2nd United Nations we've had, not the 1st. So you start looking at all these patterns, it's like, this is a 4th iteration because the first 3 failed. And all of a sudden you're like, wait, what's going on here? And it gives you a new insight into like, here's who I'm going to vote for. Here's what I'm going to talk about. And people are so dumb. I love people, but people are so dumb, not because they don't have the intellectual capacity to think, but because they don't have the framework of history. We've already done this. Like, we've already tried this before. Why are we trying again? And they don't have that backing. And I think that that's like a passion of mine right now. It's really getting people like, no, go look at what happened 100 years ago, because it will tell you that we should not do this. You know what I mean?
Absolutely. And you just mentioned the book that took me down the rabbit hole like 20 years ago. So The Creature from Jekyll Island, when I started to wanted to learn more about money, how money works, how the global monetary system works, how the financial system works. So I've been honored to have Mr. G. Edward Griffin on the show twice. And it's funny that I spoke with someone earlier today that actually interviewed him on Jekyll Island. They did like an anniversary in this hotel where they created the Federal Reserve. It's funny. There's actually, he took a picture of it. There's a boardroom called the Federal Reserve Room in this hotel. That's how, I mean, everybody, it's kind of wide open. Nobody's hiding anything, I guess is what I'm trying to say. So,
gave me like goosebumps, man. Like, to be in that room, and that's crazy.
Yeah. And it's funny that I was actually thinking this morning in our conversation that I had with him, I said, everybody should read that book right now, because then they know what's coming. This book was written like in the 90s. And in the book, he says over and over, the name of the game is bailout, right? Yeah. They're going to keep bailing people out. They're going to bail these people. So, to your point that, from our earlier conversation about the amount of money that's going to be created in the next year or 2 years, it's going to be something that we couldn't have imagined. And this is all kind of baked into the cake if you understand and you know what's going on. You know how central banking works. You know how the global monetary system is set up. You know how banks is intertwined with this. And then you kind of have a framework of looking at this. And that's why, studying this right now is probably one of the best things that you could do, because now you can see, okay, this is what's happened. So this is most likely the probability of what is going to continue, because as you've seen, as you read through the book there's not a lot of solutions in their toolbox. There's not a lot of tools they pull out and say, oh, we could do X, Y, and Z, or, here's 5. It's like there's like 1 or 2 plays, right? And that's all they got.
Rinse and repeat. Yep.
Exactly. Now, and to your point, for business owners to understand the environment that they're operated in, being from South Africa originally, so, I mean, everyone knows, like, for example, market risk and economic risk. And some people in 2008 and 2009 became familiar with institutional risk. Oh, my money's in Lehman, it's gone. But I shorted the market. I was supposed to be a millionaire. Oh, you traded with Lehman. Your account is basically gone, right? So in the institution's very important too, but a lot of people forget the political risk. So, which is huge, for investors, for business owners to understand what is going on in the political sphere and analyzing it and being clear and seeing, getting clarity, not being drawn in emotionally, but stepping back and like saying, okay, this is what's really going on. That allows you to actually make pretty good decisions, right?
Yep, 100%. Yep.
Awesome. Now, core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations, and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
This is a massive, massive question. I would say the first thing is actually something that is just wired into my DNA that I train everybody on our team. And I have a beautiful 1-year-old baby girl. I'm going to train her on the same. When we have more kids, I'm going to train them on the same. Is this idea that I'm responsible for everything. I think that sometimes people get hooked up on like what's true, what's false. They ask the wrong question. Or the question is like what's empowering and what's not empowering. And I think responsibility is the most empowering posture. It just is the most empowering posture for not only entrepreneurs but people. Now I'm responsible for everything. What are the activities that you do when you start internalizing that? I'm responsible for my life. If you've been bankrupt, you're responsible for that. Don't blame that on the market. If you've made bad decisions, you're responsible. Don't blame that on bad people. Don't blame it on Lehman. If you can take this philosophy, it will allow you to just tune everything as a learning lesson rather than an excuse. Everything can be a learning lesson or an excuse. You get to pick. The second is history is a weapon. Like we said it earlier, study the past. Study the past. The past will predict the future. You got to understand that this world is a cyclical world. We operate in cycles, ebbs and flows that repeat over and over and over. And if people can get grounded in that, then I think it'll give them a great perspective on present and future. And then the third thing, especially this is going to be great for people in real estate, but great in life too, is always examine the opposite. We get so biased. For a while I went into studying mental models and heuristics, and I got into Charlie Munger, and those guys have pages of quotes on heuristics and mental models. But one of the best questions to ask is what if they're right and what if I'm wrong? Like, always examine the opposite, because when you get to a place where you're so biased and you're so locked up that you're right, your answer is right, you create vulnerabilities in your life for being blindsided. And there's nothing better than being able to examine the other point of view and look at it wholly and say, you know what, I'm going to hold my opinion, but I've examined the other side. I've examined the opposite. And I think if more people did that, we'd have less political fighting. We'd have less unhealthy rivalries. We'd have more camaraderie as a species, because people have the capacity to look at it from the other person's point of view.
Yep. Absolutely. Those are great. Taylor, where can folks learn more about you? Where can they follow you? And where can they learn more about the different companies that you have and stay informed of all of the many projects that you will be involved with in the future as well?
So Instagram, we're building that right now. Taylor A. Welch is the handle. And it's interesting because I'm also posting my commentary and my views on kind of the political landscape right now as well. People are loving that. Yeah, it's two camps of people. People either love it or they literally are like, I want you to die. I'm like, that's weird. But it's entertaining, if nothing else. We have an excellent new podcast. It's daily, 3 to 4 minutes. It's called Daily Mind Medicine. You can go to dailymindmedicine.com. And then Facebook, we are always posting what we're up to on Facebook. Same thing, Taylor A. Welch. Social medias, we haven't really used a ton of it. We've used paid advertising, but we're starting to get in the game on making sure that people have a place to connect with us. I would say Instagram, the Daily Mindset Podcast, and then Facebook are the best places to go. Awesome.
Well, thank you so much for spending some time with us. This has been an absolute blast. Really enjoyed it. Really enjoyed connecting. And thank you so much for providing so much value for all of my listeners and viewers.
Absolutely. Thanks for having me.
This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.